Okay, here comes the all important section where we'll be discussing the allowable expenses which we can adjust from our taxable income. So it is an extremely important area, because as and when we will be calculating the taxable income, there are certain expenses which we cannot claim as allowable expenses in our taxable income calculation. So the first and the foremost here, there are certain expenditures which can be adjustable against my taxable income, and the blanket rule here is that the expenses which are incurred wholly and exclusively for the purpose of my taxable business, okay, and such expenses should not be capital in nature, which means if I am buying any fixed assets, plant, machinery, equipment, vehicles, such expenses as per the IFRS, they will fall into the capital expenditure classification. So such expenses cannot be treated straight away as an expense in my income statement in that period. Rather, it will be calculated as an expense in the form of each year's annual depreciation expense. And there are certain expenditures which we cannot deduct in our taxable income calculation. So first, of course, any expense which we have not incurred for the purpose of the business. So in this case, let's say I'm the owner of a company and I was also recording my personal expense as my company expense. I was paying the school fee of my son and I was just asking my accountant to include it in the company expenses. So prior to the implementation of the CT, it was all okay, because you were the owner and you were just advising the accountant to adjust the personal expenses also in case. But from here onwards, you can only record the expenses which are incurred on the business itself, and your personal expenses would not be treated as admissible expense if we are calculating the taxable income. Second, the expenses which we have to exclude are the expenditure which are incurred on my exempt income. So exempt income we already have discussed in the exempt income section, which were the dividends and other such exempt income items. So any expense which I have incurred on those exempt income also will be excluded. Then comes the losses, which of course are not connected from the with the taxable person's business. So any loss which is other than the business loss itself, of course, would be excluded. And if we are having exempt income as well as the taxable income, and we have a common expense which has been incurred on both of such income, so in that case we will just split it in a fair and reasonable way. FTA up till now have not specified any classification in this case, but if there is any, of course we'll be utilizing it. Unless until FTA specified any special rule for this split of the expenditure, you can use any fair and reasonable way for that. Next comes, which is very important and a bit technical also, where how much interest expense can be deducted from my taxable income. Now, of course, interest, if we are taking for business, if we have taken a loan for the business and if we are paying the interest on that, such expense from the angle of accounts and finance entirely should be adjustable against my taxable income. But from the angle of the tax perspective, there is a cap on that, and how this cap is calculated, it is important to understand. So first thing here is that we will be first calculating the net interest expense, which means we will be calculating our interest income and interest expense separately, and then we'll be subtracting the interest income from our interest expense, and finally we'll be getting a net interest expense out of it. So if in case our interest income is higher as compared to our interest expense, if this is the case, we don't have to record any further adjustment and all of our interest expense can be claimed. Okay, but in case our interest expense is higher than our interest income, in that case we can only claim the net interest expense up to 30% of your EBITDA, earning before interest, tax, depreciation and amortization. Now In this case, if your interest expense is higher as compared to the interest income, you have to do a small calculation, which I'll show you in a bit also. And in case if after adjusting it you have any interest expenses still available with you, such expense can be carried forward for up to 10 years. In future you can also adjust that. Such interest calculations would not be applicable on banks and insurance companies and national persons carrying the business in UAE. If you will be referring to my session on the partnerships, so if a partner has taken a loan initially to invest in its business and he is paying interest on that loan itself, and the partnership is not treated as a single taxable entity for the calculation of my taxable income, in that case the partner can claim all his interest, but as a company I have a limit and I can claim only up to 30% of my EBITDA. Okay, let's see a small example for this. So my earning before interest, tax, depreciation and amortization example is 5 million. So the maximum interest expense allowable is 30% of it, so it comes to 1.5 million here. Now I am calculating my net interest expense. I have my interest expense of 3 million here. I have my interest income of $500,000, so my net interest expense is 2.5 million here. So in this case the maximum interest which I can claim is of course 1.5 million here, which I will be claiming. The balance interest which is here, which is 2.5 minus 1.5, which is available here for me, this can be carried forward, okay, up to 10 years, and in my future taxable income calculation I would be able to adjust this. Afterwards we have another interesting expense, which is the entertainment expense. Of course, entertainment expense, there are quite a few expenses which the business will be incurring to expand the business, but unfortunately only half of the entertainment expenses can be claimed. Okay, and it is the expenditure which are incurred for the purpose of on entertaining the clients, shareholders, suppliers or any other business partners. Examples, it include the meal, accommodation, transportation, any other such fee itself. So in all such scenarios your entertainment expenses can only be claimed only up to half of it. Actually, if you are also familiar with UAE VAT law, in VAT law we cannot claim the entertainment expenses input VAT unless until it is just a routine entertainment expense. So here also we can only claim half of it, and any excessive entertainment expenses, it would be it cannot be claimed as your allowable expense. Next expenditure, and the final one, is that there are certain non-deductible expenditures. Okay, some of them are very obvious and some I'll be explaining you. So if you are giving any donation or grant to any charity or any public benefit entity, it should be it should be a qualified public benefit entity. And the reason is that you know that in the section of the qualifying EBEs we have a discussion that only the charitable organizations or the PBEs which are appearing in the decision of the cabinet, okay, only those would be considered as the qualifying EBEs. So in this case, if you are giving a donation to anybody who is not included in such listing, in that case your charity expense would not be admissible. Next area is fines and the penalties. Of course, any fine penalties which are incurred it cannot be claimed as an expense. Exception is that if it is awarded as compensation of damages or breach of contract, it could be the the example could be that we are having it from the court of law. Next is, of course, bribes or any other illicit payment would be excluded. Dividend or any profit distribution which is paid to the owner of a taxable person also, so you cannot claim the the dividend as your allowable expense. Amount withdrawn from the business, it is extremely important area, and you need to understand it, that amounts withdrawn from the business by a natural person who is a taxable person under conducting business in UAE as per 3C of Article 11. Okay, in this case, just to give you a reminder, is that this article specifically deals with individual conducting the business under his own name itself, which can be, the example could be sole ownerships, okay, or a partner in an unincorporated partnership. So if in these two categories any amount which is withdrawn, it could be as an example of a salary, such things cannot be considered as an allowable expense. Corporate tax imposed, of course, it would not be allowed as an expense. Input VAT which was otherwise claimable, it was a recoverable input VAT as per the VAT laws here, and we opted that we will not be claiming it. So such input VAT, of course, cannot be claimed as an expense. And then any taxes which are imposed on a taxable person outside the country also would not be considered as an allowable expense. So as and when we are calculating our taxable income, our accounting income and accounting expense would of course be different. So we have to do adjustment of all these expenditures, and finally we will be arriving at our final taxable income.